crypto turns a corner and that it's now during its cycle where it's going to start trending up slowly but surely. This is a very boring part of the market cycle typically, but this is exactly why people should get so excited, because they got time to position themselves before what I believe is going to be one of the greatest wealth generating opportunities of a lifetime.
News on the street is that the crypto winter is over. Well, is it really? Let's talk about it with Megan Nilsson. She is a crypto consultant and NFT consultant for high net worth individuals, celebrities, and we're going to be talking about her thoughts on where the crypto sector is headed from an investment standpoint and the most important updates on the regulations that investors need to be aware of. Crypto Megan is what she likes to be called. Thank you for being on my show. Crypto Megan,
Hi, David.
Megan Nilsson. Yes, hi.
Hey, hi, David. Thank you so much. It's so awesome to be here, and it is an exciting time, let me tell you. Hey, crypto winter, it might not be over, but what is over, I believe, is the worst of the worst. I believe we've seen the worst of the worst, and barring some kind of black swan event, meaning some unpredictable event that happens because of external factors, we have already turned a corner, in my mind, due to many, many indicators that I've seen on the charts, as well as other things that I look at. And I'm excited. I'm excited for the next couple of years here and to see how things play out.
It's not over, you said? The crypto winter is not over? What do you mean by that?
Crypto winter, I believe crypto winter as it was is over, meaning, the depression, the denial, the anger phase. I believe that we've been through that phase and we've turned a corner. So now I believe we're in the very initial stages of the bull run, but sometimes people get confused when they hear bull run as, up only, everything I buy is going to turn to gold. No, it's not that kind of beginning of the bull run. The beginning of the bull run right now, as I see it, is when crypto turns a corner and that it's now during its cycle where it's going to start trending up slowly but surely. This is a very boring part of the market cycle typically, but this is exactly why people should get so excited, because they got time to position themselves before what I believe is going to be one of the greatest wealth generating opportunities of a lifetime.
Let's talk about that opportunity. I'm seeing headlines like Standard Chartered publishing notes about their forecast for Bitcoin. Standard Chartered being a big bank, they believe that, or their analysts believe that Bitcoin could reach $100,000 by the end of 2024. This is, it's been covered all over the news. CNBC wrote an article about it, as did a lot of other press. And, 2024 is not immediately, it's the end of next year. So I don't want to say end of this year. But when I see headlines like that, it makes me think that sentiment is shifting back into Bitcoin's favor. People are no longer expecting Bitcoin to stay flat forever. Is that something that you've observed? Because I know you've talked to a lot of people. You have a podcast coming up, which we'll talk about. So, what are people telling you? What's their sentiment?
Yeah, absolutely. I mean, the sentiment is nor here nor there. I mean, I think people are in the disbelief stage. Like, is this really happening? Are we turning a corner? Will we crash again? And all I can say is, it's quite possible that Bitcoin could revisit its lows in some kind of, it's actually, according to the charts, it's a possibility. But what I want people to understand is that we've clearly turned a corner, and the news will start coming out with lots of articles. This is how it always works. And it's why you shouldn't only pay attention to the news. You should pay attention to shows like yours, David, where you interview people who are really involved in this world. And the news might start to get really exuberant mid-year to end of year and say, Bitcoin's going to hit 100K by the end of this year, and watch out. But I don't think that's going to be the case. I think it's going to be a slow and steady rise this year. We might go through a bit of a lull. And, by the time 2024 comes around, that's when we can start seeing the spikes. And that's for one reason. I like to back the stuff up, what I say, by what I've been looking at on the charts. And so basically, if you take a look at the prior cycles, and we'll take one indicator, the pi cycle bottom, when that cross happens, it's typically 500 to 600 days before you start seeing a new all-time high. So we just had that cross recently, and that time horizon would put us about September, October 2024. So, Q3 of 2024. That's what the charts say could be possible based on previous cycles. However, if you go back to what the news is saying about 100K by end of 2024, I believe that's possible and beyond.
You actually told me offline that you think now would be a good time to buy crypto. If somebody were interested in getting in, now would be a good time to get in. Do you mean, first of all, why do you think that? And do you mean all cryptos or Bitcoin in particular?
Yeah. So, it definitely means Bitcoin in particular. And I'm going to go into why I said that and why I'm so excited right now based on everything that I'm seeing. First of all, Bitcoin is trending down on exchanges. We saw the peak spike of Bitcoin on exchanges 2020 when the COVID crash happened. And I believe it's only going to trend down from here. And that's for two simple factors. And the first factor I want to look at is BlackRock. Okay. When BlackRock speaks, from the traditional finance industry that people listen because BlackRock manages a big majority of the world's wealth, right? And BlackRock is claiming all things are going to be tokenized, right? So stocks, real estate, derivatives, anything that can and will be bonds is going to be tokenized. And so when you think about that and you think about the chains that could be tokenized on, I mean, one of the biggest contenders for that is Ethereum, right? And BlackRock, if they just put 0.3% of their entire portfolio into Ethereum, I mean, that would mean they could buy all Ethereum on exchanges right now, which is 18 million ETH. And imagine the prices when that happens. So people are always giving these price predictions like this is when it's going to hit it and by then, but let's understand how it's possible. These big players will start to get involved as soon as there's clarity. And one other example I wanted to give you is the Shanghai upgrade to Ethereum. If you take a look at that, it just had its unlocking, meaning people can finally unstake and withdraw their ETH. And you would think logically that then there would be a dump in ETH. But there wasn't. There was a big spike. And why? It's one simple word. It's called certainty. As soon as these institutional investors have certainty, the floodgates are going to open up and that money's going to come pouring in. And I'm quoting that from our friend Kevin O'Leary because he might have been wrong about a lot of stuff in crypto, especially the people he got involved with. But the one thing I like about Kevin O'Leary is his numbers and his reasoning for why crypto could have this massive institutional bull run, why I'm so excited.
Speaking of Bitcoin versus other altcoins, you've no doubt seen the chart of Bitcoin dominance, 9-month high, but it's at 48%, which means Bitcoin's market cap is about 48% of all the entire crypto market cap. And the reason that's been climbing, some people have told me, is because people are starting to feel a little bit I don't want to say bearish, but cautious about cryptos overall. And so within the crypto sphere, Bitcoin is seen as a safe haven. So is the Bitcoin dominance an indicator of a flight to safety because people are worried, or is it something else?
Well, I think it's a combination of both, and it all has to do with, the funnel of money in crypto. When people start getting into crypto, especially big institutions, it's always starting in the big one, which is Bitcoin, the decentralized one, the only safest one, right? Then it flows to Ethereum, the second biggest coin, which is the leading smart contract developer. So everything is being built there, and it makes sense why BlackRock would want to open a fund like that. They already have a Bitcoin fund, and the Ethereum fund would give them exposure to everything being built in this ecosystem, from DeFi to gaming, anything that's, requiring smart contracts. So then it flows to Ethereum, and then they take profits and they go into the larger cap altcoins. And from there it goes to mid to small cap. And that's been the flow in the funnel of money within crypto since the dawn of time, since the beginning. So that's how it's always happened.
And when you say that this is one of those biggest wealth generators of our lifetime, early in the interview, which sector within crypto and DeFi are you referring to exactly?
I'm referring to investing itself, investing in crypto, investing in Bitcoin and ETH, of course. To go back to what Tim Draper said, this is a really important year. If you take a look at the economy as a whole and what's happening and how countries are starting to trade in things that are not the dollar, he's predicting that Bitcoin could hit 250,000 by the end of 2024 and that prediction is based on if 6% of the world's currency is replaced by Bitcoin, right? Due to these trades being happened, the dollar being circumvented, he believes that that's possible by the end. So, just to go back to your question, I think that that's going to be a big factor in this whole institutional bull run, right?
There's been some opposition from the governments when it comes to crypto adoption. Senator Elizabeth Warren, for example, tweeted not too long ago that she's building an anti-crypto army. There's a poster, actually. She made a nice-looking campaign poster. I'll put a link. I'll show the audience. Have you looked into this? What exactly does she mean?
Yeah, I mean, she is, this is pretty known in the industry, but she's definitely financed and paid by the banks. She represents the banks. And so, when you have that kind of backing and when you have that kind of goal, the banks are very, very threatened by the possibilities of what crypto can do. And so she's trying to, drive this anti-crypto campaign in a year where actually crypto has the ability to solve some of our big financial problems. And it's precisely in the way that the states responds that we're going to decide, okay, are we going to be on the forefront of this movement, which we're already drastically behind, or are we going to drive all this innovation away, including Coinbase? And, she's paid by the banks, so she will do what is in the best interest of the banks. And then you have Gary Gensler, SEC chairman, and he is saying, that, this whole campaign where most cryptos are securities, when in fact, in 2018, he's actually on video saying, actually 3/4 of the cryptocurrency market are commodities. They're not crypto. So there's all these back and forth, all these incongruities, and all these things that don't make sense. And right now, they're playing a hard anti-crypto campaign, and it's sad to see, but in the years to come, nobody's going to remember that Elizabeth Warren campaigned for this to die or this to be stifled, because we're all going to be where we're going inevitably.
Well, Gary Gensler's SEC has been very busy on cracking down certain personalities within the crypto space that have been promoting cryptocurrencies. But, the CFTC as well, what happened with Binance. They got sued by the CFTC about a month ago. Coinbase was issued a Wells notice. I don't know if you've seen the video in response to this Wells notice that Brian Armstrong and his lawyer put out last week. His lawyer said very clearly, Coinbase does not list, clear, or affect trading in securities. I want to touch on that word securities. That is the critical word, because there's this big debate as to whether or not cryptos are securities and should be guided under securities law. That is one of the reasons why the regulators are cracking down. But if they're not securities, then, the regulators technically don't have jurisdiction. Where do you stand?
Well, I stand by the fact that I think he keeps going back and forth, and you've got to see this video. If you can pull it up or, show your audience post clip. I mean,
we're committed to working within the regulatory perimeter. We want to see a clear market structure for trading crypto securities. Not all crypto assets are securities. There's also crypto commodities. There's stablecoins. There's crypto that's artwork.
I understand that the Wells notice means that the staff has reached a preliminary determination that aspects of our company's core business violate securities laws. So I want to be very direct with you. Coinbase does not list securities. We use a robust process based on SEC guidance to make sure that we don't list securities.
This is a video of him speaking, and he says in 2018, 3/4 of crypto aren't securities, they're commodities. And so they're flopping back and forth on this. Coinbase clearly wants to work with them and has been trying to work with them to understand where they are. All of these institutions are feeling around in the dark. And that's the problem here. But it's also why we've been presented with such a massive opportunity, because none of these institutions are willing to touch this until they get certainty. And in the meantime, people like you and I can invest, right? And we can get ahead of that wave. But back to the security thing. I mean, it's the Howey test, right? It's are you investing with the expectation of a profit? And the fact about Ethereum is that you're staking that to a node and you're securing the chain and you're getting rewarded for doing so. It's not the same. It doesn't coincide with the Howey test, and he refuses to have a conversation about it. And so I don't understand why they want to push that narrative.
Tell us about the sectors within crypto that you think will gain the most momentum in terms of adoption over the next few years.
Definitely gaming. I mean, I know a lot of people have said that, but there's been a lot of backlash from the gamers because they kind of see it as, well, all these people are coming out with games that aren't fun. And, it's taking the joy away from gaming instead of making it like, okay, I'm going to have these skins and sell them and cool. It's like play to earn in a game that's not fun just to earn. So I think it's when we can start getting the games going strong and being actually fun to and the gamers adopt them to be gaming, it'll be layer ones, it'll be everything that facilitates people coming from the outside and making things easy, frictionless. And actually, Tim Draper, in his $250,000 prediction, he said, I'm definitely all for the decentralized cryptocurrencies. And he mentioned Bitcoin and Bitcoin Cash, which is funny enough, one of the coins in my wallet, in my portfolio. And a lot of people hate that project. And there's a lot of discrepancy over whether or not it's a good project, but it is actually being highly adopted around the world as a payment method.
Well, do you agree with Tim Draper's $250,000 call?
I would be inclined to say that after we do get regulation, then sky is kind of the limit, because all of these, sovereign wealth funds around the world, they won't touch this stuff right now. If the US isn't on board, if there's no clear regulation, they don't want to touch it. So as soon as there is, I mean, that wealth is going to come pouring in. There's a scarcity now because there's going to be a halving next year, March 2024. And so there'd be a supply shock in Bitcoin. And it all makes sense that this is setting up for there to be a massive bull run, an institutional bull run, a real one where there's regulation behind it.
I was talking to Fred Thiel, CEO of Marathon Digital, and he brought up a very good point that some people sometimes overlook, which is the fact that come the halving, miners' costs will usually go up. And this has happened before. This is going to happen again. And he projected that the industry average break-even cost to mine Bitcoin next year, come the halving, will be $40,000. And we're sitting at just under $30,000 today as we speak on Monday. And so, the Bitcoin price needs to be much higher than even today's level for a lot of miners to be profitable, right? So,
Right.
Are you expecting this halvening cycle next year to play out the same as it has in previous cycles, which is to say that Bitcoin has usually gone up a few months after the halvening?
It's never the same, but it always rhymes. History doesn't repeat, it rhymes. I think this year, people may not want to hear this, but I think this year is going to be more of a boring year, and that it won't hit their expectations as far as price, because that's typically what's happened. And it takes time to build these solid foundations and these structures for us to be able to have a massive bull run. However, we've always already trended that way. And by the end of this year is when we're going to start going into the year where we could reach an all-time high and beyond. And I absolutely believe that that's possible. I mean, for sure. If all of this plays out the way that it looks that it will, and BlackRock is on board, and all these people are fighting for these scarce digital assets, just to put it into perspective, we're under 300 million users today. By 2025, we're on track to onboard 1 billion. So this is due to the technology adoption curve, right? And then if you look by 2030, we'll have onboarded 4 billion people, 4 billion. What do you think the prices of these scarce digital assets will be when we got 4 billion users in the ecosystem?
4 billion people, by 2030, it will be roughly, 40% of the world's population, perhaps less, depending on what the global population will be. That's a significant number. What are they going to be using cryptos for?
Well, I mean, there's all kinds of cases for that. I just did a panel actually not too long ago where Kevin O'Leary and Anthony Scaramucci were there in New York at Benzinga, and it was how to onboard the next billion users. So I believe that the next 200 to 300 million will come from big brands, right? Big brands adopting the technology, getting their fans involved, getting their consumers involved, probably through NFTs as well. That's a big thing now. And then having to buy crypto to be able to interact and transact with that. And everything else that's going to follow suit. But I believe that'll be the next 200 to 300 million. And then from there, we're going to have a much bigger adoption rate as soon as people see these big brands adopting these use cases playing out. Amazon, all the big guys getting involved.
We're also on the cusp of this mass tokenization trend where a lot of things are getting tokenized that you probably wouldn't think are getting tokenized. Real estate is something we talked about, and I've heard this before. Is it necessary, Megan, to have, let's just stick with real estate. Is it necessary to have real estate tokenized? What are the benefits?
Necessary? No. I mean, we're transacting today just fine without it. But my God, once we start to adopt blockchain technology for this, it's just a game changer. I was watching, there's a show on Netflix. It's about like an auction house and how they auction off physical collectible goods. And I was thinking, man, this is just so inefficient. And I get why people like to collect things, but what if they could do that all digitally, which we are now, and we're trending that way. So when you think about real estate, I mean, people want to be able to pay for things with their crypto, first of all. And that facilitates a lot of stuff like cross-border payments, which take forever, and they're very high in fees. I can tell you, working here in Marbella, Spain, where I'm at, in the south of Spain, some of our clients, the clients who are my friends who are big developers, they spend like hundreds of thousands of dollars in transaction fees and stuff like that. And it's absolutely crazy. So number one, facilitating that. And number two, what if you could turn your house deed into an NFT and buy and sell a house? This is far out in the future still, but within 10 minutes, without an intermediary, without, a broker, without a lawyer, without all the people in between, in the middle, that caused this process to be so slow. I mean, sky is the limit. So right now I'm working on a really big project here in Marbella that we're going to launch within a couple of weeks, which I'm really excited to share. And I think that this is the way real estate is going to be trending in the coming years.
Well, how exactly would that work? Just real quick. So let's say I'm selling a house or buying a house. It doesn't matter. Let's say I'm selling a house, and then my property is tokenized. What does that mean for the transaction? Does that mean that anybody can just buy it without having to go through the traditional financial rails, or how does that transaction physically play out?
So tokenized also would mean okay, you could see all of the previous transactions. Everything would be visible on the ledger, the blockchain ledger, right? As far as your house being an actual NFT, that would be a contract that you could buy and sell between sellers. I mean, there's a lot of nuances there, but another thing that I see is, okay, A, accepting crypto as payment, but B, making a replica of that house in the metaverse for people to be able to view. And this is going to be big in real estate. I mean, I see real estate agents all the time here with their phones. We live in a really luxurious part of Spain. People are buying from all over the world. How do you show that house in a way that's effective to somebody who may buy it sight unseen? So building a replica of it in the metaverse in a way that's easy to access, just one click on the computer and you're in, and it's spatial audio, and you can decorate it as customizable as you want and have as many people in the viewing as possible. It's just brilliant. It makes for that space between us doesn't exist anymore.
I want to talk about stablecoins versus Bitcoins because a lot of people have told me actually that stablecoins will one day surpass Bitcoin in terms of use case and adoption. And I'm starting to see that in some companies. I talked to Coin Payments, for example, a company you're familiar with, and they used to have most of their transactions with their merchants. So Coin Payments, for those people who don't know, they're sort of the payment custodian, and merchants go through them to transact with Bitcoin and other cryptocurrencies B2B. And so they used to have Bitcoin as the number one source of transactions, which is to say that Bitcoin used to be the dominant medium of exchange on their platform at least, and now it's no longer that case. Bitcoin is about 30 to 40% of their total transaction volume on Coin Payments, and it's mostly stable coins now. And a lot of people have said that makes a lot of sense. Why would you, if you believe that Bitcoin is a store of value and its value will go up, why would you spend it? Right? Why would you use it? Which in itself is kind of ironic, because if you don't spend it and use it, where's the utility? Why would it keep going up? It's kind of a chicken and egg problem. I'd like you to address that. It's interesting.
Yeah, I can definitely see what you mean there. I mean, a lot of people bought Bitcoin a while back, and they have quite a bit of. They want to be able to purchase things. Once they switch that to a stable coin or to the euro or the dollar, that's a taxable event. But if they roll their Bitcoins directly into an investment, it's different. Right. So there's that aspect of it. And that certainly is a benefit. And then second of all, I guess it's just being able to make those transactions without the headache of having to convert it to dollar or euro or any other kind of coin, and just being able to spend it. But yeah, as a store of value, it is also a great place to keep some of your savings. I think a lot of people are setting some aside and spending some and kind of somewhere in between.
Okay. And
what are your thoughts on that, David?
What are my thoughts on that? Oh, you're turning the tables. Look, if I've talked to some people who know engineers who used to be, this was last year, who were paid in stable coins. They've asked to not be paid in US dollar fiat. They've asked to be paid in stable coins, and that is because they wanted to get higher yield at crypto asset management firms than a traditional bank. My thought, I would be open to being paid in stable coins if I do have that same yield today. But I mean, the interest rate today is higher than it was last year. So it's a risk reward trade off. There's no risk of my fiat being depegged. However, it could lose value to inflation. So it's always a risk reward.
Yeah, no, I get that. The risk reward, for me, the risk reward is holding Bitcoin, getting paid in Bitcoin. I mean, that's at this stage in the market is like everything. If you think if I believe Bitcoin's going to hit 250K by the end of next year, or $1 million by the end of the decade, my God, if you can be paid in Bitcoin for part of your salary and just let it sit there, not financial advice, but that for me would be an ideal scenario. And I think it's good to keep some Bitcoin as a store of value because, like everything that we've looked at and that we've seen and the direction that we're trending, I'm sorry to say this, but all the people waiting on the sidelines for Bitcoin to hit $10,000, I think they're going to be stuck waiting because when Bitcoin takes off and it does have its astronomical run, it doesn't wait for you. It doesn't wait for you and it's gone. So that's why I'm so excited about this year, because we've got time. Everybody who's bored or thinks this is going to be a boring period, you've got to change your mentality completely and find a way to get as much extra expendable cash as you can to be able to invest in this thing. Because I'm telling you, this is going to be like the generational opportunity. It is. It's here. It's now. And again, not financial advice, but I think that people need to shift their mentality from this is boring. Why isn't Bitcoin doing anything? To I've got time. I've got time suddenly to be able to be involved in this massive revolution.
Well, I certainly use Bitcoin as a form of payment if let's say a layer 2 were added on it and I could transact with it in real time, waiting for the block to finish processing faster. Because I think that's one of the problems is that you have to, over the internet, if it's done virtually, it might not be a problem. People can wait a few seconds or minutes, but if you're standing at Starbucks and you're just like, waiting for that to go through and there's a whole line of people behind you, it might be inconvenient.
Yeah, true.
Finally, let's talk about your work. You have a podcast coming up. That's exciting. Tell us about that and, give us a teaser of who you'll have on and the topics you'll be discussing and when that's launching.
Yeah. So I'm really passionate about this. I'm really excited for it. So one of my missions, my biggest mission is to help people get on board, understand what they're investing in, to learn about it in an entertaining way. So I'm launching a podcast to host industry leaders and celebrities doing meaningful work in Web3 so that people watching can be entertained by their favorite person or by somebody to look up to and learn at the same time. And that is everything. I want to help onboard new users. I want to get them involved and I want them to be on the inside of what's happening in a fun way. So.
All right. And where can we find this? When can we expect this to launch? And, we want to be there.
Yeah, so this will be launching next week at all the major outlets. So Spotify, Apple Music, it'll be the Crypto Making Podcast, just simple so everyone can find it, no problem. And some of our upcoming guests are including artists in the NFT space, but also in the Web 2 space, such as Snoop Dogg's son, Cordell Broadus, and his dad, which was such an amazing surprise, also joined the episode. So Snoop Dogg's dad is there and multiple generations of Snoops. And future guests will be Tim Draper, Yatsu from Animoca. We've also been in touch with the ambassador of El Salvador. So hopefully we'll be making out there to interview the president. And,
nice.
We got a lot of big names coming up and I'm really excited to get this going and to, put that out there.
All right. So it's called the Crypto Megan Podcast.
Yeah.
All right. We'll be there for that. And thank you very much, Megan, for coming on my show. And best of luck to your podcast launch. We'll put a link to your website down below. And I'm assuming you'll make an announcement on the website as well. So
Yes. And thanks for having me, David.
All right. Thank you. And thank you for watching. I'm David Lynn. Stay tuned for more and don't forget to subscribe.